Good morning, everyone. It's Jeff Fitzpatrick, and it's time for my Not So Monday video recording this week. It's actually Tuesday because yesterday was the first day of the month of October, and I want to capture the outcome of September. So, with nothing further ado, let's get moving. So, this week I will be looking at the results for September. I'll also be looking at some new research that I've come across, which seems to be doing very well, that I hope we can pick the brains from. First of all, then, so let's see how things are going. So Diamond was actually into net liquid value profit. Now, it didn't go down, but when I sort of brought the results through, it actually had about a $21,000 additional investment. So when you take that into account, it slipped slightly back under again. In terms of the left-in value, though, it's now well ahead, and I have no doubt with a gain run rate of 6.9% per month, it'll be there by next month, no problem. It is running 1.3 times faster than the S&P, and it's already at break even, and it's got about 14 months left to double and 17 months to get to its 5-year time horizon, at which point people can take money out without having to leave unrealized put income on the table. Fortune, they're actually there. So invested 288, net liquid value 294,000, very good. Left in value ahead of that, 314. Gain rate 5.35, running at the same rate really as the S&P now over those months. But I'm trying to get all of these up to 7, and I think we can. What's missing at the moment is income really from price appreciation, and that's because generally we haven't got the right stocks. I've been in them for a long time, waiting for them to recover, instead of getting out of stocks at short-term targets and getting on to another one. So not so bad overall. Teas are it's a very strange one. It's not on here, but if you actually look at the average amount invested, it is way lower than the 203. But at the run rate of 5.8%, nearly 6% per month, it's catching up, no problem. Sapphire didn't have such a good month. It did pull ahead, and it pulled ahead by many tens of thousands of dollars. But it's such a huge account of 1.25 million that it takes some doing. But nonetheless, I can't see any reason why we can't get that up to 5, 6, 7%, the same as the others. 100th millionaire, quite a few legacy trades in this one. It doesn't really, it's one that I help with the trading of. I don't really control the trading strategy. So they've got quite a few stocks that we might want to have pulled out or by now and replaced and use the ink of something else. But we've got to be a bit conservative on it. Nonetheless, it's doing okay. It's in profit, and the profit is both in net liquid terms and also in left-in value terms. The Extra Income Club also in profit, whichever way you look at it, and 6.5% run rate, so well on the way, beating the S&P, so all good. On average, I wouldn't know if I trust that average, 6.28%, and ahead of the S&P. So I think things are going rather well, and if we can keep that going, in fact, we can improve it, then absolutely fantastic. Just a quick repetition of my don'ts. Don't compromise on quality. Don't ignore earnings announcements. They're hugely important, and a lot of them are pretty imminent now. Keep in control of the cash and the stock buying power. I'm seriously considering where we're using this strategy of the short term out of the money puts of increasing the requirements. At the moment, we want to keep the stock buying power at least 50% of the net liquid value of the account. And they're all well above that. In fact, we have trouble getting rid of it sometimes. So I'm going to edge that up. I'm probably going to take a first step of taking it to 60%. And that will make things less of a risk for each of the clubs. So that's to come too. So let's have a look at what happened in September and also ahead to October in the put trades that we've been doing. And here we go. So starting with Diamond, we've currently got a $29,000 worth of income coming in from put sales for October. Only one has actually not even just gone into this mauve color. Mauve means that the stock is likely to be put to us, but we're still in profit. And you can see that none of them are in mauve. If there's a negative sign in front of that mauve figure, that also means it would be put to us at a loss. We had one stock put to us early, which was TAP, which is Molson Beers, and we were still $300 to the good on it, so that was fine. Everything else for October, fine and dandy at present. Fortune, bit smaller club, $10,800 in profit. And we've got one stock which is causing us a bit of issue there, which is Xerox, XRX. So I'm keep looking at that and wanting to push it forward. At the moment, we've got two in it, so at least one is reducing the loss on the other one. So not a problem. And overall, as I say, it's still 10,000. If I can push forward XRX, at least that $15 one, we'll get rid of that 3,930 loss. And if I can push it forward and down, we won't just push the loss back, we will reduce it or eliminate it. So that's where we are with Fortune. Teas, no problem, much smaller club again. All good, nearly 7,000 in profit sat there coming to us. Sapphire, 25,000, no issues again whatsoever. And then we got 100th Millionaire. One stock, BP, has already been put to us, so it's all right, we're dealing with that. And the other one is SSRM, that mining stock, which I call a legacy stock. It's not a stock that I would want to be in. And the difference isn't huge, and we're still in $3,000 of profit on it, so no big deal. And the winner so far with $30,353 of profit in the Wings wedding for us. However, beaten by QI, no issues here whatsoever, and looking at $43,500 plus of profit coming to the club as a result of selling short-term out of the money puts in October. And the Extra Income Club, 13,700. Again, the same stock, TAP, which is in profit, but really wants rolling forward. I'm just waiting to let some of the time value ebb away from it, and then we'll do that. So currently, overall, $160,000 worth of profit from these trades in October. Here is how September finished off at least. So Diamond, it did have some that were negative and so on, but nonetheless, we ended up $30,458 in profit. So the exercise is good. The total negative there is 2,500 or 2,200, something around that. Couple in Fortune, both in profit. 8,000 in profit, so we're on a bit more than that this month. Teas, no problems, 4,000 in profit. Sapphire, a couple of stocks put to us in the month, both of which we were able to move on, but stay in profit on. Best part of 30,000 in profit for them. 100th Millionaire, remember they were up there this month a lot, but they're growing, so 18,000 profit in September. Only one negative trade, and that was Fossil. Fossil these days I wouldn't touch with a barge pole. And QI made 12,000. You remember they're having a huge month this month. I think there might be a bit of a pattern building like that, where you use your buying power in 1 month and it doesn't expire quickly enough to get the same amount of buying power used in the following month. So then you have a brilliant month, a very good month, a brilliant month, a very good month. We'll see if that pattern continues. So QI, fine. Only one. BlackBerry, another dog that needs shooting. And EI, Extra Income Club, again, one put to us that was stayed in profit and in profit overall. So in August, we did a total profit of 109,000 from short-term puts. September, a little bit, 109,000 almost there. And in October, we're looking at 159,000. Now, some of these trades will change and some of them will get moved on, rolled forward and rolled down and so on. So that figure will probably come down. In both of the previous months, that's exactly what happened. So that's the puts for September and October. And next, the filter results for this week. And here they are. There were quite a few of them. Big thing on this is the earnings announcements dates. Keep your eyes on that. What I'm also now looking quite carefully at is the clearance. Let's see, we can see here it is. So I've got clearance, two rows here, total clearance and total clearance percentage. And the total clearance is, so let's do an example. On the first one here, the current price is 104.85. The strike price is 100. So it is $4.85 below the current price. So we've got a bit of clearance there. It's actually 4.85, which is 4.63%. Then we've got the premium to add to that, and we end up with a total clearance of 660, which is 6.29%. So looking across the page, we've got total clearances on these trades of 6.29, 5.31, 4.53, 4.94, 10.95. There's a good one. 4.63, 3.88, 4.11, and 6.68. So when I'm doing this, I'm looking at that as one of the factors, particularly in what might be volatile times. Remember, we've got the US elections coming up, but nonetheless, we are going with really good quality stocks. We're going with very good clearances, and we're very adept at pushing these forward, rolling them forward and down also. Done many during the past few months. Okay, during the week, I came across something that was originally called the NAIC, which you think it stands for National Association of Investment Clubs. This is an American thing. In actual fact, it stood for the National Association of Investment. C was something else. Anyway, it went out of business or stopped, changed its name, I think, more than went out of business. And it's now called Better Investing. And they have a very thorough stock selection guideline system. Very, very good. However, it is very much oriented towards buy and hold. Their philosophy is basically a 5-year strategy of buy and hold. And that's a rolling 5 years, not heading to a time horizon as we have. And this is just the very first part of the check that they do. So we're first of all, we've got it's a chart, and this is just an example from the guide. And the years are on the bottom, so it started back in 2006 and it finished here in 2016. That's the last time they updated their guide. So it's also on a logarithmic, well, technically speaking, a semi-logarithmic scale. Semi-logarithmic just means it's logarithmic on one axis, not two. And it's basically just a way of presenting data which is very different, but making it comparable. So on here, for example, the green line at the top are annual sales. The bottom line is the earnings per share. I mean, so very, very different figures. These are sort of $2 and $3 or whatever. The top's millions of dollars, basically. So, but we can compare what's going on. The high-low points in the middle are the share price for each of the years, the high and the low, how high it got, how low it traded. So what have we got? We've got sales along the top. Then we've got pre-tax profit is the pink line. So what we can see here is that as they went forward, the sales and the pre-tax profit had a little bit of a zip. The distance between them has increased. So they're not making as much profit on their sales as they previously were. Then below that, we've got the earnings per share. And there's a similar but different dip there. So that can be manipulated a bit by the company. So, for example, if they buy some of their shares back, there are fewer shares to divide the profit by, and they could actually increase that. So, looking at earnings per share isn't of itself sufficient. You've got to have a look at what happened to the pre-tax profits, and then that. We can also see that as profits have generally gone up, then the share price has gone up. There's a bit of something went on here. This have had a bad quarter or something. That's something else to look at. But in general, it's going up in line. If you put a trend line through that, at about the same level of climb as the other marks on the chart. And they've also put in an extension of some trend lines. So I'm starting to reproduce this. I've not got all the way yet, but let's have a look. This is using their data as well. I've just put it into Excel, and you can see I've got the clear sort of drop I can see up here, and we can see what's happening here too. So I'm not quite finished with this yet. It's early stage of development, but it's another tool for the analysis. The better investing people put a huge amount of emphasis on growth and growth trends and growth forecasts. And I think that's perfectly reasonable. The Facebook group is now up and running and doing well. The extraordinary trading system, you'll find that there is a page called that, and there's also a group called that. And both are proving okay, proving popular. I've now got 70 plus members of the group. I hope you'll join it too. And I am putting sort of extras in there, and it's looking quite lively. So I'm quite pleased with how that's going. So check out Facebook and have a look at it. If you wish to, please join and share any posts that you see in there that you like. The Young Stars Club, I'm making some changes to it. So at the moment, it's only worth sort of about $6,000 or $7,000. I want to grow this and grow it very quickly. I want to get it onto the same growth trends as the senior clubs that we have. I really want to make a lot of money available to the young members by the time they get to adulthood. So I've given them the opportunity. Previously, they had the chance to put in just $500 each, full stop. I've now raised that to 2,000, so the kids can put in up to 2,000 anytime they like. And I've offered the parents, guardians, grandparents, whatever they are, of the kids, the sponsors of the children, the opportunity to put in up to 2,000 as well. Now, that is a huge benefit. The benefit for both the kids and the adults is that TICN don't take fees from this. So they won't be taking their 30% cut of profits. So it is a huge benefit. Now, it's not an open-ended thing. I basically want to get the value of the club over $25,000 so that we can do the put trades. So until we get to that point, I will leave the offer open, the opportunity open, and I'm now widening it. So I'm now saying, even if you don't have any youngsters in this club, as long as you're a member of one of our other clubs, then you can put up to 2,000 into this one, and there'll be no fees on the gain to come out of it. However, I will close the door when it gets reasonably above $25,000. So if you want to do it quick. Go to the myinvestmentclub.co.uk website, join a club, and you'll see Young Stars listed there. And if you want to go more than 2,000, which I hope some of you might, We do have people who are not members who now see these videos through YouTube and through the Facebook group. If you want to join us, again, myinvestmentclub.co.uk, you'll find out a lot more there. And I'll also get you the opportunity to speak to any or all of the 350 or so members that we have in the clubs already. Ask them what you want outside of my presence. So that's great. The training is coming up in November. I'm having to do a lot of work for it. Friday evening, 15th, 5 till 9, live trading. The market's open, of course. Saturday is about assessing quality, and Sunday is the trading system that I'm using that you're seeing these fantastic results on. If you want to operate that trading system, then you really need to come along. If you just want to understand that trading system, you really need to come along on the 17th. But hopefully you'll join us for the full weekend. And it's at Watford, the Hilton Hotel. Booking and more details available at myinvestmentclub.co.uk. And the book, to be honest with you, the book is still a fantastic read. It is a very clear explanation of how the clubs work and also of the trading system that is generally in use in TICN. However, I am writing like crazy a manual for how we trade using this new system, and that will be available later in the year. Those people who come along to the training on Sunday at the Hilton Hotel in Watford, they will get a copy of the new system. I think that's about it for now. Have a great week, everybody. Thank you very much for listening.